Hello, you're listening to the Motor Trade Radio podcast, and we're delighted to welcome CAP HPI's Director of Valuations, Derren Martin, for his monthly review of used car trade values. Welcome to the show, Derren. This is always a busy time of the month for you, so how's your week going?
It's thanks, Curtis. It's always busy around our deadline time, our monthly deadline time. Of course, we have live running all the way through it, but we cut off values on over the weekend and publish them tomorrow, Wednesday. So it's a busy time.
Yeah. Now, as you say, the latest CAP HPI editorial is published tomorrow. But it's interesting having you on because after several months of plateauing, you're actually reporting an unexpected increase in trade values for the first time this year. Can you bring us up to date with the headline 3-year 60,000 figure for September and maybe how it compares with previous Septembers?
Yeah, so we're seeing a 0.3% increase in September. I mean, that's a small increase, but it is the first increase we've had this year. We've had a sort of a plateauing over the summer, but even during that plateauing, it's been small movements down. So for there to be an upward movement, a little bit of a surprise. We didn't predict it last month. We thought it would be probably closer to level with maybe a small movement down, but it has been strong. But in September, it can tend to be a reasonable month before the volume starts to hit from the new plate in years gone by anyway. So we've actually had either level or a small movement up since sort of 2016. So it's not amazingly unusual, but it is something that we weren't really predicting this time around because of all the things that are going on in the world with sort of cost of living concerns, consumer confidence, and supply levels increasing. But supply levels are, well, I mean, there's been very little sign of that. And also from a dealer's point of view, not really much of an impact from the cost of living concerns at the moment either.
Yeah, and before we go into the detail on what's happened over the course of the month, typically how much of a factor is the plate change in terms of the impact on trade values for the month?
There's obviously an impact because certainly in pre-COVID days, September would be huge. March and September, you'd get a lot of volume coming in, and that leads to a lot of part exchanges in the market and cars coming back from fleets. Rental companies churning their stock and getting and obviously the chase for market share from manufacturers and the chase for volume. But we're in a different world now, so there's by no means the same amount of volume this September as there has been in previous ones. I think it's going to be similar to last year, but prior to COVID, that it would have been far more cars appearing in the market. So the supply levels do have an impact based on that new plate, but it's probably going to be less this year than it has been in previous times.
Yeah, hi Derren. Yeah, I think it's right, and I think just to your point earlier about it being a busy time of the month, I think every day is busy at the minute, isn't it? With as you say, it's live now, so the conversations with the customers are probably every day for you, not just at this time of the month.
Yeah, everyone's keen to know what's happening, especially because we are in unusual times. The plateauing over the summer was unusual. Prices are high, obviously, because of what happened last year. Values going up. We've still got cars that are 30% ahead of where they were a year ago. We've got cars that are 70% of where they were 3 years ago at the same age and mileage point. So people expect a crash to come? I don't think they do anymore because we've kind of allayed fears on that one. But I think it wouldn't be a surprise for values to start coming down. And of course, we've still got a lot of cars that are above new car list, which once new cars start to come through in more volume, that tends to not be sustainable.
Yeah. And, looking at the sort of sectors and age profiles, I mean, it's fairly stable all the way across. I mean, the 10-year 100,000 mile has shown a weakness, but that's obviously in some monetary terms very probably negligible. Could you just talk through sort of what you've been seeing in terms of that age profile and where those strengths and weaknesses we start to see a little bit?
Yeah, well, anything on our averages, obviously we talk averages, but there's a lot of devil in the detail. But from 5 years and newer, it's an upward movement. So at 1 year, values up 0.3%. At 3 years, it's the same, 0.3%. At 5 years, it's up 0.2%. And in monetary terms, those are small amounts. They're all sort of less than £50. And we've got a small movement down at 10 years, but that's sort of not across all sectors either. So some sort of upper medium cars, D sector, they've actually gone up at that 10-year point. So it's quite mixed at that older age. But yeah, across the age groups, that the younger used cars are performing well. And as I say, up to 5 years, they're doing okay as well. Looking at sectors, city car is the strongest sector, and those sort of smaller vehicles that dealers are they're lower risk for dealers to stock, so they've been keen to snap those up, and obviously for consumers as well, maybe for their second car, that's a good purchase. And we've seen Fiat 500s, Citroen C1, VW up, all gone up this month, so they've performed okay. And as you say, across most sectors, it's very similar movements. So city car stands out, but across other mainstream sectors, they've all gone up by similar amounts, which is quite low amounts really. Anything that's dropped tends to be a little bit more seasonal. Convertibles, coupe cabriolets, sports cars have had a small drop, which is probably a little bit later than in previous years.
And it looks like we've talked, I think, a couple of times before where we talked about MPV, SUV, and maybe those sort of large executive sectors, and they look to be the ones that have shown a little bit of weakening again, in particularly in sort of that large SUV that's been under a little bit of pressure recently, has it?
Um,
But
Maybe,
from a high point, I suppose. We
yeah.
forget where these figures have gone to, don't we? That's the problem.
Yeah, I think you sort of have to put into context. It's a very small movement down for large SUVs, but I mean, values do tend to go down. We've been in unusual times when they've been increasing. It's not usual for them to increase. So I don't think there's too much pressure on those really. So they've kind of performed okay. MPVs, still relatively good value cars. And a bit like city cars, there's not many of them produced new anymore. So yeah, if you want a used MPV, then you still have to you've got to go out and pay the money for them, but they're still relatively good value against SUVs, so they've gone all right. And Sophia has actually gone back up this month if you've gone all right.
Did you buy some, Curtis, when they went down?
No, the lot is empty now.
And I mean, last time we spoke, we talked about obviously the fuel types and what was happening with obviously combustion, particularly petrol and diesel, compared to sort of the alternative fuel sectors, and we sort of started to see some strength in that. The battery electric vehicles. What's happening now in sort of fuel types, particularly as you pointed right at the start, that cost of living. We know the forecourt prices at petrol stations are starting to ease back slowly, not to the levels that we've seen previously, but there is a bit of ease in there. What's happening now?
Yeah, over the last few months, it has been quite notable that alternative fuels vehicles have performed better than petrol and diesel. But in September, that seems to have evened out a little bit, really. And we've seen diesel cars, so at 3 years, diesel cars on average have gone up by 0.2, petrol gone up by 0.2 as well. So they are overall, they've been doing okay. And that's equivalent to, a very small sort of figure, really, like less than £50 again. When you look at electric, they've performed okay. There has been a little bit of weakness for Model 3, Tesla Model 3. Seen quite a lot of volume come back for that, and they've been obviously new car supply of those coming through as well, I guess now. So they've been under a little bit of pressure, but again from a very high point. But we're probably going to see in September the most amount of Teslas within our data than we've seen within the sold data in the trade. So that has had a bit of an impact. So they've come down by around 3%, which is a reasonable amount, about £1,200, I think. Hybrids is actually the strongest fuel type, so the pure hybrids, not the plug-in hybrids, and they've actually gone up on average by 1.2%. And we've seen some pretty reasonable increases for cars like the Kia Niro, Lexus CT hybrid, and in particular the Toyota CHR has gone up this month. So there's definitely a consumer demand, and I guess with fuel prices that did go up, and maybe a little bit of concern about that in the going forward, that people are buying hybrids and looking for that type of vehicle, maybe as a halfway between before they buy an EV, and obviously they're cheaper than EVs, a lot of them.
And every month you ask dealers about how their stock levels are looking month on month. So what have you heard back from them in terms of stock levels and indeed consumer demand? What are you hearing?
Yes, stock levels are, it's a really interesting one, because pretty much to a man, nobody is overstocking. There's a little bit of wariness. Stock levels are, I would say, lower than they've been in previous years at this point, but dealers are relatively happy to be in that situation. They're not prepared to take too much of a risk with overstocking at the moment. I mean, consumer demand is on a bit of a knife edge, I would say. It could go one way or the other. It tends to drop away in the final quarter of the year anyway.
Yeah.
Plus, you've got the cost of living concerns, but you've got government measures that have been put in place to try and help with that. And from the dealers that we speak to, they're okay about where demand is. Their supply levels are okay. As I say, they're not overstocked, and demand is kind of just about keeping up with that. So I think you speak to them, and some of their sales guys are saying we need more cars, and we need to push it more. But I think their margins are okay. They're maybe being squeezed a little bit, but they're okay with where they are with supply and demand at the moment. And I think it's been a bit of a pleasant surprise that consumer confidence hasn't really affected the used car market to any great degree at the moment.
So it sounds as though it's fairly balanced, fairly well balanced at the moment.
Yeah, I would say so. I think we're in that situation where trade prices are going up because there's not a great deal of supply out there, and dealers are buying to replace, and buying to sort of buying clean cars. They're definitely still keener on clean cars rather than buying work, because there's a shortage of technicians and parts supply and things like that. And there's obviously been sort of typhoons in the Far East and things that can affect the supply of parts. So yeah, cap clean cars have been well sought after, but with consumer demand not being through the roof, it's very difficult when trade values go up to push the retail values up when the demand isn't there. So we are seeing a little bit of a squeeze on margins because of that. So because trade is going up because supply levels are quite low, but that should ease a little bit as more supply comes through. Maybe some of those prices won't go up anymore.
And do you think, I mean, historically, we've always had the dealers starting to build up for January, because January is a key sort of month and first of the quarter of a new year. And every year pre-pandemic, that sort of period when the dealer market was out buying got earlier and earlier, didn't it? It started kind of, it
Yeah,
was December, moved into November, then suddenly they were out in October buying heavy volumes just to make sure they get stocked up. Do you think, is that kind of there yet, or do you think it is just a case of filling empty spaces for
I,
today's market and not even thinking about what the need for January yet?
yeah. This time last year, dealers were stocking up for January. They were stocking up early and banking and yeah, getting the order, getting the sort of the stock banks up. But I don't think we'll see that so much
Mm.
this year. I think there's too much uncertainty. I think obviously last year we had sort of Omicron came um, and the demand wasn't quite there. And I think dealers were left with sort of cars in January, February that they'd had for quite a while. I think there'll be less of that stocking up this year. And that, yeah, if there's less demand over the next couple of months, that could affect prices. So, yeah, I don't think we're seeing it at the moment. I think they're more, like you say, filling empty spaces and satisfied with where they are with their
Yeah.
stock levels at the moment, just because of a little bit of uncertainty.
Like you say, not necessarily want to build their stock up just in case the market does ease off a little bit and it affects them. Do you
Yeah.
think, I mean, you talked about margin there and the reasons for some of that pressure on possibly around margin squeeze a little bit. And I don't think the fire sales are sort of entering now. I think they're fairly sitting quite firmly with the margins at the minute. But do you think there's any sort of impact that we might see an impact from interest rate rises sort of affecting that sort of dealer margin? Or do you think, do you know what it is in terms of that's the new interest rates that we'll have to adhere to?
I think it's going to have an impact. Interest rate. It's going to have an impact on their APRs. Some of the strong finance deals might not be around anymore. They might not be able to do those. I think longer term, people coming out of fixed rate mortgages, they're going to be paying more. That could have an effect as well. So there's got to be some concerns. We can't escape the fact that we are in sort of difficult times for the economy. But yeah, I think it's dealers are just sort of carrying on really, and as demand is still there, and used cars are strong in times of economic downturn. Let's face it, people still need to buy a car. And you can see that on those city cars that have gone up. People still looking, but maybe just being a little bit more careful with things. But I think, yeah, overall the market is okay with a degree of wariness, I would say.
And finally, we always ask you, Derren, what your thoughts are over the coming weeks. So, what are your expectations for trade values over the coming weeks? And September's rise was a surprise. Do you expect a correction in October?
Yeah, what's really with September's rise, so we had a fall in August of 0.3. So September's rise of 0.3 has almost just kind of sort of reversed that small decline in August. So I think supply levels will increase. They won't increase to the degree that they have in previous years, but there will be more cars coming into the market. And generally in quarter four, consumer demand drops away, and obviously we've got lots of things adding to that this year with the cost of living concerns. So I think it would be fair to say that values will drop at some point between now and the end of the year. Whether that's in October, I think October might be relatively stable. It all depends on when supply starts to come through, and I think September at the time of sort of speaking is. New car is 1.2% up over last year, so it's very, very similar to last year.
Yeah.
And I think that there will be cars that come through over the next few months that may have been earmarked for September. So it'll be a bit more spread out this time, but volumes will increase and demand will decrease. And when you look at prices already being high, I would expect some price drops, but not dramatic. And if it was a 5% over a couple of months, we've seen that before, and that doesn't cause too much of a concern in the market. If that sort of thing happened, I don't think it's necessarily a bad thing. Also, when new car supply comes through, that probably means that used cars that are above list will probably have to drop in value as well. So you might get some sort of things like that just make sense really with regards to values. And then once we get into next year, it is very difficult to call. But obviously, we're 3 years on from the start of COVID next year, so there will be less 3-year-old cars in the market because that's when the volume started to decrease.
Yeah, that's the key now, isn't it? I think we forget that this isn't a rolling cycle, isn't it? From when the sort of supply and registration started to drop 1 year on, we saw the sort of pressure in that 0 to 12. We started to see it in the 0 to 24, and now start to see it in that sort of 0 to 36 as we enter that sort of 3-year-old market from when the production and registration start to drop. But I think to your point, I mean, year to date at 7.7% down, excluding plate lift, you forget how strong that actually is against a normal depreciation year, never mind what we saw last year and the year before, don't you? So even if we do get a depreciation in November and December, it'll still be a strong year in terms of annual depreciation period, won't it?
Yeah, definitely, and values will come down. Values do tend to drop as cars age in their life cycle. They become worth less. It's sort of a fact of life, and we've been in a very unusual time for a couple of years now. So it shouldn't be seen as an issue if values do start to drop gently, because they are at a high point, and certainly they're still going to be higher than they were before we had those big rises of last year.
Yeah, I think that's the point clearly, isn't it, that we forget where the values went to and where they're dropping from and where
Yeah.
they need to still drop to if they do ever return, if at all, to that pre-pandemic value, to those points that you made earlier with the 30% and 70% compared to pre-pandemic values. I mean, that's some significant increases. But I mean, as always, Derren, it's fantastic to have you on the podcast. I think, you know, we obviously, you know, we welcome you back on every single month, and it may be worth just getting you back on for a quick update mid October maybe, as we sort of navigate through this sort of final quarter of the year. But as always, you know, a reminder for listeners, the editorial is available to view from tomorrow morning. So that's on Wednesday, the 28th. It'll be available. You'll see it on the CAP HPI website, which is cap-hpi.com, or it'll be shared through both Derren's and other channels on social media. So do check out that on LinkedIn and other social channels there. And again, you know, please do come back, Derren, next month, if not before, and share your views. And thanks a lot for coming on, as always.
Yeah, no problem at all. Cheers, guys.